Alright guys, we are back again with another video, and in today's video I will be going over the buys that I took today on the NASDAQ, and this is a break-even trade and my thought process throughout the entire breakdown. But before we get into the video, I want to show you all my most preferred prop firm as of right now, Breakout, by our guy here, TraderMain on Twitter. So as always, what we do here is we use the economic calendar for our roadmap to understand when and where our volatility injection will be into the marketplace. So today, Tuesday the 16th, we had high impact news at 8:30 in the morning, which was the Empire State Manufacturing Index. So now that we understand that we will be having a liquidity injection or volatility impulse into the marketplace, let's look at the chart at our higher time frames just to see where we are drawing to. So this is a daily chart on the NASDAQ, and we have a dealing range from this low to this high, and I have price marked off trading into a discounted internal range liquidity pool, this daily bullish fair value gap, and our reaction off of it was bullish, trading through this daily bearish fair value gap. So in my mind, I am looking at this as an internal range to external range move. So this is my label drawn liquidity. And price trading through this SIBI here, my mind is understanding that this will be used as support to then push to higher prices. Now, this is an hourly chart dropping from our daily, and we're monitoring price as we trade and have action inside of this daily inversion gap. I already mapped out what we would look like on Monday from our weekly outlook as to what my thoughts were for what price would be doing on the NASDAQ. And I believed that price would be running this low and then impulsing higher, which is what we did. But I did make a few mistakes on the way there in regards to my timing when I made my execution. I don't believe that we're going to be sweeping out this low, the 16,753.5. That should probably stay intact. I'm going to have this low marked off in case we wanted to sweep this. And this is from Friday's day. Or you could also just mark off the NFP highs resting here. Or CPI highs, I apologize. And then CPI low. But the more favorable thing would be price doing any sort of means of dropping like this, or dropping here like this. So now returning back to the chart, here is our hourly view after we ran that low from Monday's low and then as well Friday's low. We had a reaction after we ran the low as anticipated in our weekly outlook, with displacement closing above this swing high and tagging this hourly high probability bullish order block. Looking at now a side-by-side view of the NASDAQ and the S&P 500, I thought that it was a comfortable place to put my stop loss at this swing low here, because if you look closely, these corresponding lows with NASDAQ and this low here with the S&P, lower low here, higher low here, so NASDAQ is giving me the indication that this is our strength leader, so I'm going to prefer longs on the NASDAQ. So I entered off of this hourly order block with my stop loss resting below here. So moving forward, since we have our hourly key level, which was the hourly bullish order block, and then we had an hourly bullish fair value gap on both the S&P and the NASDAQ, we have our high impact news to pay attention to at 8:30 in the morning. And as you can see, our 8:30 in the morning news on both the NASDAQ and the S&P was bullish on the data release. And in my eyes, we had candle closures running above this swing high. So in my mind, I was like, okay, now that we're getting bullish news, I'm more comfortable to readjust my stop loss. So what I did was I readjusted my stop loss to break even after these candles closed above this swing high. Another reason why I did move my stop loss to break even early was also because I did notice that we did have SMT at the highs with the S&P 500 compared to the NASDAQ. But I believed that since we had S&P at the lows here, I just figured that NASDAQ would continue to be our strength leader, continuing throughout the day's trading day. Now, fast forwarding to equities open, as you can see here, we have both ES and the NASDAQ running its highs resting here and creating SMT at this low and this low. You can see a higher low and a lower low off of that hourly bullish for value gap. So I was pretty confident in this move, pushing my stop loss to break even and letting price do its thing to see if it can go in our anticipated direction. And as you can see here, fast forward a little bit of time, price retraces aggressively and retags this hourly bullish for value gap, taking me out at break even. Now, what could I have done differently? One, I could have waited for post equities open and after all of the news to come out. Or two, I could have just left my stop loss resting at this low here, allowing the risk and the trade to play out because I'm just trading my plan. And let's see how this would have played out if I didn't readjust my stop loss and we just let the trade go in our anticipated direction. Looking at now NASDAQ on the 5-minute chart, the trade simply just wanted to clear the relative equal lows, creating an intermediate term low, clearing these short-term lows to the left, and then we have a short-term low to the right that delivered completely to previous daily high. So in regards to what I did wrong and what I could fix in the future. What I did wrong was entering prematurely, executing before a news release and before equities open. So knowing the volatility injections that price gives us on index futures when we have high impact news and we have equities open, my best interest should be not adjusting my stop loss early before these volatility injections, because as you can see, price played out perfectly to my anticipation. But we didn't reach the 1760 level that we were talking about. We just reached previous daily high, but still that would have been a decent risk to reward on the trade that I took. So in the future, I have two options. I can either wait until after equities open or after news release, or I could just keep my anticipated stop loss, accept my risk, and just let the trade play out and just not adjust until after these volatility injections come into the marketplace. Now, the whole gist and the morality of why I wanted to do this breakdown is to show you guys what I was anticipating before the trading day and how I traded the price that was delivered. And I had a plan. I executed based off of that plan, but there was certain little details based off of my plan that I can fix and adjust to make sure that I don't make the same mistake in the future. And for me, I would have profited on this trade if I didn't adjust my stop loss early, because I was still on the correct side of the marketplace and my draw was in fact correct. Now, I wanted a video like this to be a little bit different than my previous ones. I want this to be more transparent and organic so that you guys can understand exactly what goes through my mind when I'm executing these trades, if I'm making a mistake or if I'm winning a trade or if I'm losing a trade. And I'm sure I will do a trade breakdown on a loss that I take, and I will make sure that I put it in very close detail to make sure you guys see that I had a trading plan, I had a vision prior to price being delivered, and all you need to do and all you need to focus on here is sticking to that plan and trading that plan. Don't change your bias. Stick to that one bias that you had, lay on your risk, and let the trade play out. And that is exactly what I did, with just one minor thing that would have actually netted me this profit on this trade. But I hope you guys enjoyed the video and appreciated the transparency here. You win some, you lose some, and that's just the name of the game. But we still stand here, no emotions, and we continue to trade another day and learn from our mistakes. But anyways, if you guys have any future ideas for any videos, please drop them in the comments below, and I'll talk to you guys again next week for our next upload.